Let's talk about the efforts now to put some numbers and some measures around sustainability, which is tricky. And it's actually pretty appropriate that we're here in Bloomberg. Actually, Michael Bloomberg's on the board of the Sustainability Accounting Standards Board. Bloomberg, the company, was one of the first to put out an impact report using SASB standards. Yeah. Talk about examples you've seen of companies start to do this, put numbers on sustainability.
Yeah, I think one of the interesting companies I had a discussion with recently is Kering, which is a French luxury company, and they've ventured based on work which their subsidiary Puma did in 2011 into developing an environmental profit and loss statement for their complete group. Indicating the real price, not only, let's say, from all the raw material and inputs, but also from the externalities of extracting water or polluting water with all the different steps in their supply chain all the way to the end product. And I think that's a very interesting and also very applaudable effort to bring the whole natural capital base into a report for investors. And it's definitely an example for other companies to follow.
Great example. And in fact, I think Kering and Puma hope that other companies will adopt it. They call it an open source kind of guideline, or the environmental P&L, and they're encouraging other companies to look at how it's done and perhaps adopt it. Impact investing. This is another one of your functions, one of your roles at Robeco. For those who don't know, impact investing, what does that mean compared to normal socially responsible or sustainable investing?
Well, we would be looking at investing not only with a financial return in mind, but also with a societal return in mind. And Robeco SAM has recently also launched its impact investing platform, where we now offer an impact monitoring tool on carbon management, on energy, on waste, and on water usage. And there will be more solutions to follow for asset owners who want to indeed create more of an impact with the investment work they're doing.
Can there be a kind of reduced expectation of financial return if you're getting a social or environmental return? I mean, could it be that impact investing gets zero financial return if you get a social or environmental return?
There is certain groups, which is more, let's say, from the NGO or charity background, who would be willing to make a trade-off in financial return to create social return. To us, as asset manager, that's not a area within impact investing we would want to venture in, as ultimately pension funds and others have a fiduciary duty to their beneficiaries to bring a good return on capital put to work. However, there is also a growing number of pension fund beneficiaries who also want to have a measured impact generated by the money in their pension fund. So for those groups, we are now looking into providing solutions where you can have a market rate return, but with a dedicated and measured impact for society.